Oh, good afternoon, everyone. Happy Wednesday. So we'll give everyone a chance to sign on here while we kind of go over some small stuff like the disclaimer. Let's put up that notice. So remember, past performance is no indicator of future performance. We are not registered investment advisors. We are not certified. This show is for entertainment purposes only. Nothing in it is an offer to buy or sell any security or anything actually. So maybe a membership to a site. So we'll give everybody a chance to sign on here. Let's see. Get everything set up. Set up straight. Let's put the market out. Okay. All right, we've given everybody a couple minutes to get in here, so let's go ahead and get started. So first of all, we've been talking about we've been in this X trade for a few days. We just closed it out today at about a 40% gain, which is real nice. If you're not getting those kind of gains, then you know where to go. But with this X trade, we kind of got into it a few days ago, and X had a great day today. It closed at its high. But we decided to take the profits on that. X is a very, very volatile stock. So it can give up just as quickly everything it gains. So we didn't want to take any chances. No one ever lost money in taking profits. So we did. We'll revisit that tomorrow, and we might reopen that trade. Let's see how it reacts overnight and stuff. There's some big market news after the market, some big earnings. We'll get to those in a moment, but the market outlook, everything's pretty much all systems go, right? I mean, this is about 3-4 days worth of rally. It's been a nice, strong rally. It's been really helped with the financials, and we'll get to that in a moment because there was a big financial that missed today. It's just been really good. It's not just FANG. There's a lot more to the market now, thankfully. We needed everything else to kind of come and help participate to get to those all-time highs. We'll see if we get to those all-time highs, right? We're within striking distance, and there's no reason that we shouldn't be able to get to that. So it's just all right. So let's move on to the next subject. Of course, the market outlook we just talked about. You want to be careful here, right? We're kind of at an iffy situation, maybe an inflection point. We're pushing towards those all-time highs. Things are going pretty good, but after hours today, our first big miss, American Express, they missed on revenue, and the stock's down about 3% after hours, and it's not doing too well. How that affects the Bank of America trades and things like that, we'll see tomorrow morning. Really, American Express, this miss was not unexpected, right? They just lost that big contract with either Costco or Sam's Club, where they weren't the exclusive credit card for them. Not a whole lot going for American Express right now. It's considered a rich person's card. It's considered an expensive card. So there's a lot of competition out there. And when they give up these big corporate contracts, like happened with this Costco thing, it really affects their bottom line. So they missed on revenue this quarter, and we'll see how that affects things. People might kind of just take this into stride because they understand American Express is it's not really definitive of the financials. IBM beat. We've been talking about IBM the last couple of days, right? Because we were talking about what happens when IBM reports, and they had about 5 years of misses. Well, they just banked their third win in a row. So maybe there's something in IBM for you traders out there, for you long-term players, for guys that are looking to put things in your 401k and stuff. Maybe there's something in there for a long-term play. You might want to take a look at IBM. It got beat up for a long, long time, missed earnings and stuff. It's an important component of the Dow. It might be an opportunity there. So the big thing is right now the retailers, right? So yesterday was Amazon Prime Day, and as you guys know, there was a lot of problems with the internet. We had some technical difficulties yesterday, and there were some technical difficulties with a lot of things. What were some of the big sites? Deadspin was down for a while. Drudge was down for a while. Shopify was having some problems. Snap had some problems, and it was all because of that Google back frame. So it looks like those are resolved, but it didn't hurt Amazon. Amazon had its best Prime Day ever, And here's the great thing: the big box retailers had their best day also. So there was a nice prime effect, right, that really helped the retailers. Now, we're not big on the retailers, and we've got a short in Pandora, which is not really retailers, it's streaming media, but it kind of is affected by these things. So it's interesting. Maybe there's something in there. Target had a real good day today. Some trades for those of you that are looking for trade ideas. So, and that's kind of the way the market went. Now, look, first thing we're going to do is let's talk about our saying of the day. So we're going to do Warren Buffett again, because we love Warren Buffett. And this is one of the most important things you can remember also too. Almost everything you hear from Warren Buffett is important. So look, don't save what is left after spending, but spend what is left after saving. Now, we try to use these sayings that are going to help you build wealth, right? That's what our company is all about, building wealth for our members, for ourselves. And hopefully through this show, maybe we give some information that helps you build some wealth. If not, you know where you can check it out. You know what to do if you need some help. But look, this is critical. What you should be doing is you should be investing, right? I mean, how are you ever going to build wealth if, say, you make $100 and you spend 80 of it on bills, and then you have $20 left over, and you go out and you buy lunch or all these kind of things that you don't really need, right? When you should have took that $20 and you should have invested it, right? So that's what Warren Buffett is saying. Instead of blowing that extra money, put it to work. Put it to work. The younger you are, the sooner you put it to work, the better off you'll be. Okay, it always works. That is 100% formula that never, through the tales of time, have failed. So let's roll into a subject that was posted yesterday. Today, we started a little late today, so we're gonna make the show brief. Unless there's something really important in the comments, we'll address those tomorrow. But wanted to talk about a comment that was made yesterday about trading your retirement. Now, a lot of people are under the misconception that when you have a IRA or something like that, you can't actually trade it. Well, that's not true. You can trade it. The common way is to buy some funds and stick with some Vanguard or whatever, Janus. Is there even still Janus out there? I don't know. Or maybe some ETFs, right? And just sit on them, right? Just sit on them. Just keep putting into your 401k, just sit on. Now, that can work out. But if you want to accelerate a little bit, guess what? You can actually trade in those accounts. We do it for our accounts. The office people, they have IRAs and things like that, and they're trading in those. You can absolutely trade in those. You can absolutely build that wealth faster, maybe get to that retirement date sooner. And that's important to know, because a lot of times people have these 401ks, they have these IRAs, and they don't even realize that they could actually use that to invest and accelerate their wealth a little bit more. Now, with a retirement account, you never want to build extra risk into it. So whatever your strategy was at the time that you decided to go in and trade there, you want to make sure that your new strategy is going to get you equal or better results. Actually, if it's only going to get you equal results, it's not worth the trouble of working on it, right? If you can just leave it there and get 10%, but if you work it, you're going to get 10%, then you might as well, why work, right? It's going to get it for you anyways. But if you want to take that 10% and you want to turn it into 15, 20, 25, 50%, then the way to do it is to manage your own retirement. Now, a lot of people like to take control of their money, and that's a big part of it, right? Personally, for myself, I don't like having someone else manage my money. Now, of course, I'm a little more experienced with managing my money, but if I did need help, I would just enlist it, and you guys know where to get the help. But look, it's important because I like to control my money. I like to know that if my money wins or loses, it's because my decisions, not some other one else's. I like to know that if there's an opportunity to not get 8% gains this year, to get 45% gains this year, just because I'm controlling it, I absolutely are going to take that opportunity. But the big thing you want to remember is this is your retirement. This is your nest egg. You don't build crazy risk into it. You don't go out and fill it with penny stocks. You don't go out and buy lotto options every week, right? You don't shoot the dice. You don't play the craps. What we do is we invest. You're investing for wealth. And that's important at what we do over here at Stock Pick Profits. And you guys know it. What we do is we're about wealth building, and we just want to every year beat the market and better, right? You know, if you fall into this ambulance chasing psychology where it's got to be 150, 200 point gain, and it's got to be right now. I mean, I got to win this trade today. You know, you're going to lose every time. You're too short-sighted, and you're not giving things chances to work out. Yeah, everybody loses trades, and we lose trades too. Of course, we closed X today at a nice little gain. If you didn't get a nice little gain today, look, this market's running right now, and so you should be making a little money, right? And if nothing else, if you're a longer term investing, your investments should be going up. So let's make sure that you don't build any extra risk into it. You do it logically and you do it sanely, but you don't build any extra risk into it. That's why we say, when we talk about, that was a great question yesterday. Thank you, Samuel, for that question. If you do manage your own retirement, remember, it's your nest egg. And, you know, the office will tell you about that from all of us and the trade team, because they consult with us all the time, the office. I mean, imagine you've got hundreds of years of combined experience in your trade room. You're right next to them. They tap us for information all the time. But we never tell them buy penny stocks. We never tell them buy lotto options. We always tell them do it like we do it with our members. You know, if we're up about 32%, we haven't calculated in the trades with that X trade. It was about 45%. I got to go do the math. But we haven't added that in. But up until that X trade today, we're up 32% for the year. You know, when you compare that to other people's marketing, you bet maybe 32% doesn't sound that good. How's your portfolio? Are you up 32% this year? I mean, 32% is stellar. We always talk to you about it. And this is being in the right mind frame for being a wealth builder. Remember, you're not an ambulance chaser. You're not a bells and whistles kind of person. You are about building your wealth consistently year and year, better than the market would, right? So just remember that you can trade your retirement. You want to trade your retirement because you want to accelerate the growth in it, but don't build risk into it. Never put penny stocks into it. Never do any kind of crazy stuff like that. Okay. Little bit of speculation is okay in there. Maybe you've got a small stock that's got a big story behind it. Absolutely. Put a little bit in there and hold on to it, you know, but don't ever build extra risk into it. And again, if you need some help, you know where we are. Remember something. It's just like the X trade today. We put out the X trade, and the way we did it was, you know, we put stops on it and we put trailing stop, just to guys give you a little bit of vision into what happens with within our system. So we put out an order and it had the limit, put a stop at this amount. If you're using trailing stops, set it at this amount. And we followed through. Now, maybe it didn't hit that stop. Maybe the trailing stop never triggered. So guess what? If you're with another service tomorrow, they're on to something else. They're on to the new trades. They're on to whatever they're doing, right? They don't care. They told you to do this, and if you didn't sell, that's your problem. At stockbigprofits.com, where it's no man left behind. So we have a contingency plan, just like we were talking about the last few days with Snap, how we had a contingency plan. We had two contingency plans. We had one for the people that didn't have a lot of funds that wanted to keep the trade alive. That was the calls that we got into, which we're not sharing that publicly yet because that play is still live. But we also had the conversion, which if you had a little more money in your portfolio, $1,300, right? You could convert and get some shares at $13. It had a rough day today and it's still up. So, you know, that was a great conversion. But no man is left behind with stockpickprofits.com. Now, Roland's got a question about that trade, and I usually don't do this, but I'm going to do this today. For that X trade, what does stop mean when you explain stop and trailing stop? Or, okay, What's the difference between a stop and a trailing stop? A stop is when you just say, I'm going to sell this at 30 cents. If it goes to 30 cents, you are to sell this immediately, Mr. Broker. That's a stop. A trailing stop is where you say either a percentage or an amount of points. You say, look, as soon as this stock comes 5 points from the high, it's going to trigger, right? So a trailing stop will follow the highs up the ladder. It's a way to sell towards the top. It's the way without you having to sit there and watch the tickers, how to sell the top. Now, what happens with what is the difference between a stop order and a limit order? Well, a stop order is just sell right now. A limit order is where you're usually at above the price. So, you can be very specific. Now, the best way to get used to these things is to go practice within your brokerage account. Don't take my word for it. Go practice. And we always tell our clients that too. Roland's one of our clients. But we'll discuss this more in the group, but you should absolutely know what these things mean. So, especially at this point. Roland, you're one of our older subscribers. And so, look, we're gonna cut the show a little bit short. It's a good crowd today. Not a whole lot of questions. Rule of 72, absolutely. That's simple economic calculations. Sana from, I believe you're still. Where are you, Sana? Are you back in Sweden? But anyways, just to close the show, we'll say a couple highs. But look, remember that, you guys, okay? You want to make sure that you're always building wealth. So it's just like with this X trade. Yeah, X closed at the high, but we wanted to protect those profits. Why? Because we know X is a volatile stock. It could go up 2 days today, and it'll open tomorrow down $3. So we didn't want to give that profit up. If you didn't get out of the trade, you know what's happening. So we'll follow up when we no man left behind. Again, like we said, with other services, they put out that sell order, and if you don't execute it, you're on your own. At stockpickprofits.com, we don't do that. So you guys have a great Wednesday. It's hump day. Rest up a little bit. It's been a long 3 days, and there's a lot more market to go. Remember, we had American Express just missed. IBM just beat. That's kind of a dueling in earnings report. So we'll see how this shakes out overnight with futures and how we open up tomorrow morning. There's some more earnings coming out. The other big thing is right now, the banks, regional banks are starting to release their earnings. So, and you guys know there's a couple regional banks that we really like, that we're into, and we're looking forward to some good earnings. We think that with the regional banks, the big banks had great earnings. We think the regional banks are going to have even better earnings. Okay. So, okay. Oh, you're still in Australia. Nice. But look, you guys stay cautious out there. We're approaching those all-time highs, but we're not pushing through it yet. It's been a lot of work to get back to this point. So the market could be tired. The market could need a breather before it takes a shot at those all-time highs. Earnings could come in the wrong way, and it could just kill this rally. So be very cautious. We're known as a company that'll rip off 4, 5, 6, 200, 100% gainers in a row. But with this X trade, we're very cautious, right? Because we know we're at an inflection point. Things could turn on a dime. So you guys trade that way going forward, okay? That's the best advice we can give you as fellow traders. So you guys have a great afternoon. You guys enjoy your Wednesday. We'll be back tomorrow with another live show. All you members will be back in the group, posting any kind of comments and answering every question. And that is what we're going to close on Samuel's comment. This is the most, I love this comment. This is my favorite. No one ever lost money taking profits. I mean, if somebody's going to make fun of you for only making 40%, you know what I mean? Just walk away. Anyways, we'll see you guys tomorrow, okay? You guys have a great afternoon. Thank you all for your participation. Thank you all for tuning in.